Welcome to the Explainer. Today, we are going to tackle one of the most powerful indicators out there, VWAP. But here's the thing. There's a massive mistake that most traders make when they use it. So we're going to break down the institutional playbook step by step so you can start using VWAP to get a real professional edge.
So here's our game plan. We're going to kick things off by exposing that huge VWAP mistake that just trips up so many retail traders. Then we'll pull back the curtain and show you how the big institutions really think about it. After that, I'm going to give you a super clear, actionable playbook. We'll even walk through a couple of trades to see it all in action, and we'll wrap up with what I think is the single most important piece of the puzzle, the trader's mindset. All right, let's just dive right in. Look, to get VWAP right, we first have to talk about how so many traders get it so wrong. It's this fundamental misunderstanding that honestly costs people money right out of the gate.
So what is this critical error? Well, it's treating the VWAP line like it's just another simple moving average. You know the drill. The common thinking is, oh, price crossed above, I should buy. Or price crossed below, I better sell. But that reactive crossover strategy, it's a trap. It almost always gets you into trades late and makes you completely miss the true power of this indicator.
This slide really gets to the heart of it. It's a huge shift in perspective. Over on the left, you've got the retail approach, basically chasing price after it's already made a big move. But on the right, that's the institutional approach. They see VWAP as a benchmark, like a fair value price for the day. So they're not chasing anything. Nope. They are patiently waiting for price to come back to them, back to this value area, just to see how it reacts. It's a total switch from being reactive to being proactive. Okay, so let's make that mental shift right now. If we want to trade like the pros, we have to start thinking like them. And that means we need to understand what VWAP truly represents to the big players. You know, the ones who actually move the markets. And this right here is so crucial. Don't think of VWAP as just a line on your chart. Think of it as the financial center of gravity for the entire trading day. It's the exact price where the most volume, the most actual money, has changed hands. For institutions, this is their performance benchmark. Their big, fancy algorithms, they're often designed with a really simple goal. Buy for what they consider a good deal below VWAP and sell at a premium above it. All right, let's get practical. Let's move to the blueprint and see how all this builds into a clear, repeatable strategy. This is where we turn all that theory into action and start hunting for those high probability setups. This four-step process, this is your playbook. Step 1 is simple. Identify the trend. Just look at the slope of the VWAP. Is it pointing up? The big guys are probably buying. Is it pointing down? They're probably selling. Next, step 2. Wait for the pullback. This is where the discipline comes in. Instead of chasing, you have to patiently wait for price to come back to the VWAP. Then, step 3, get price action confirmation. You absolutely need to see evidence that other traders are defending this level. And only then do you move to step 4, plan and execute the trade. With your confirmation in hand, you enter with it predefined stop loss, maybe just below the recent swing at the VWAP and a clear profit target. So what exactly does that confirmation look like? Well, here are 3 classic examples. You might see a pin bar, where a long wick pokes through the VWAP before price gets aggressively pushed back, showing a clear rejection. Or you could see a big, powerful engulfing candle, where one candle completely reverses the previous one, signaling a major shift in momentum right at that key level. The point is, you need visual proof from the candles themselves that this fair value area is actually being respected as support or resistance. Okay, let's see how this all plays out in the real world. We'll look at 2 trades, maybe on something volatile like gold or Bitcoin, and we'll compare a disciplined trade that follows the playbook with an impulsive one that just throws the rules out the window. This table tells the entire story, doesn't it? Let's break down the good trade. What was the trend? Well, the VWAP was sloping up. It was an uptrend. What was the action? The trader patiently waited for a pullback. And the signal? A perfect bullish pin bar right at VWAP. The outcome? A successful entry and price bounced beautifully. Now, let's look at the bad trade. The trend was clearly down, VWAP was sloping down, but the trader fought the trend, tried to buy anyway. There was no clear signal, and the price just sliced right through VWAP like a hot knife through butter, leading to a loss. It's the exact same indicator, but following the playbook, that made all the difference. And this brings us to the final, and I'd argue the most important piece of this entire puzzle. You can have the greatest strategy in the world, but if you don't have the psychological discipline to actually execute it, well, then it's pretty much worthless. Seriously, if you take one thing away from our explainer today, let it be this. Your true edge in the market doesn't come from some secret setting or a magic indicator. It comes from your ability to just sit on your hands and wait for the highest quality setups to form. That pullback to VWAP, confirmed by price action, that's an A-plus setup. But man, it requires some serious patience to wait for it.
So let's turn this into a simple set of rules for your mindset. First, always trade with the VWAP slope, never against it. It's your compass for the day's flow of money. Second, you have to avoid FOMO, the fear of missing out. If you miss a pullback, so what? Another one will come along. Chasing is a loser's game. Third, trust the confluence. You need to wait for both things to line up, the level, which is VWAP, and the signal from the price action. And finally, always define your risk before you even think about clicking that button. Know exactly where you're getting out if you're wrong. And that brings us to our final question for you. We've just walked through the entire institutional playbook for using VWAP as this dynamic level for high probability entries. So now that you've seen this approach, how does it fit into your own trading? I'd love to know, so let us know in the comments. Do you use VWAP mostly for your entries, for your exits, or maybe just for confirming the trend? Thanks for tuning in.